With this series of videos, we start off with the first major syllabus area, that is income tax. While concepts from this area will be tested in section A and B of the exam, one of the 15-mark question from section C will definitely cover the concepts of income tax. We will start by covering certain aspects of syllabus area B, specifically related to the scope of income tax and related to the calculation of taxable income and the tax liability. We first start with the definition of income tax. Income tax is tax paid by a UK resident individual on his or her taxable income in a tax year. By individuals, the tax authority refers to all persons, including children, even those under the age of 18, provided they fulfill the UK residency criteria. Taxable persons are required to pay tax to UK tax authorities on their worldwide income, that is, income earned not only from within the United Kingdom, but from any other country as well. While we will be looking at who is considered a UK resident individual and what taxable income constitutes of in future discussions, for now we need to be clear that income tax is paid by individuals meeting a certain criteria on their income earned during a particular period, which is known as the tax year. The tax year runs from 6th April of one year to the following 5th April. For our exams, the relevant tax year is 6th April 2023 to 5th April 2024. So the income tax questions we will come across in the exam scenario will cover information of income earned during these specific 12 months. Now, the foundation of the tax law is already covered in the statute, but annual changes to keep the tax laws relevant are introduced in what is known as a Finance Act. The Finance Act covers the financial year, which is another tax term, and this specifically refers to the duration 1st April of one year to the following 31st March. The Finance Act relevant for our exams is the Finance Act of 2023, which covers the financial year 1st April 2023 to 31st March 2024. The tax rates applicable for the tax year 23-24 are picked up from the Finance Act 2023, and you'll observe that the difference between a financial year and the tax year is just of 5 days, which is ignored for tax rate application purposes. While our current focus is to determine the income tax payable amount, there is one more amount that may be payable by individuals to tax authorities. This is known as National Insurance Contributions, or NIC. This amount is also calculated according to the tax year, but is subject to a different set of tax rules than income tax, and we will be covering this concept in detail at a later time. For now, let's have a look at what UK residency is. For an individual to be liable to pay income tax to the UK tax authorities, they need to be UK resident. This includes children as well. The reason why determining the residency is important, because as mentioned before, a UK resident individual will be required to pay UK income tax on their worldwide income and claim double taxation relief where applicable. But if a person is deemed to be non-UK resident, then they will pay tax to HMRC on only the income they earn while in UK. But who is considered to be a UK resident by HMRC? The first check is to see if the individual fulfills the criteria that automatically makes them a resident or non-resident. There is criteria laid out by tax authorities that, if met, will deem an individual to be automatically resident or automatically non-resident. Any individual who is in the UK for more than equal to 183 days in the tax year will be automatically considered a resident and will therefore have to pay tax to the UK authorities on their worldwide income earned in the tax year. Alternatively or additionally, if the individual's only home is in the UK or they carry out full-time work in the UK, they will be treated automatically as residents. On the other hand, an individual who's been in the UK for less than 16 days in a tax year is automatically considered to be a non-resident, and they will only be liable to UK income tax on income earned during the tax year. Other criteria for automatic non-residency is when an individual has been in the UK for less than 46 days and has been treated as a non-resident for the past 3 tax years, or if the individual has been in the UK for less than 91 days and works full-time in another country. You will have to remember this criteria for correct application in any given exam scenario. You'll also pick up on the fact that this criteria set out for automatic residency or non-residency does not cover all possible scenarios. So for example, what about a candidate who has been in the UK for more than 90 days but less than 183 days? For this, the HMRC has laid down additional guidelines in the form of a residency table. In order to read the guidelines correctly, you need to first establish how long an individual has been in the UK for the given tax year. Then look into whether the individual was previously treated as a resident or non-resident, and then identify how many ties or links to the United Kingdom they need to possess in order to be considered a UK resident. This is the information that we need to be able to read. This will be part of the tax rates and allowances document that will be available to you during the live exam, so you do not need to worry about memorizing it. So, we have a column covering the days spent in the United Kingdom, and by day we refer to the individual's presence in the UK at midnight. The relevant column out of the following two is based on the previous residency status of the individual, whether he or she was previously resident or not. Let's assume that in a given scenario, individual A had been in the UK for 110 days in a tax year. Let's look at the leftmost column to identify the suitable range and then read across after establishing whether the individual was previously resident or not. So, if individual A was previously resident, he will be considered UK resident yet again if he is able to prove that he has 2 or more ties with the United Kingdom. If, however, he was previously non-resident, then he will be treated as UK resident only if he is able to prove that he has 3 or more connections with the UK in the relevant tax year. In case he is unable to prove these ties or connections, he will be treated as a non-resident in the tax year. But what ties does he need to prove? The following: close family in the United Kingdom, that the spouse, civil partner or minor children; house in the United Kingdom made use of during the tax year; doing substantive work in the United Kingdom; being in the United Kingdom for more than 90 days in either of the previous 2 tax years, or spending more time in the United Kingdom than any other country. So if individual A is able to prove the necessary number of conditions laid down by HMRC, he will be treated as UK resident, and if not, they will be considered as non-resident. Let's look at how the concept of UK residency can be tested in the exam. This is an example taken from an ACCA CPD article. Joanne is self-employed as a painter. She has previously been resident in the UK, spending more than 250 days here each tax year. On 6th April 23, Joanne purchased a property in Spain, and during 23-24, she mainly lived and worked there. However, she still has a house in the UK where her husband and family live. Joanne visits the UK on a regular basis, staying in the family home. During 23-24, a total of 80 days were spent in the UK, of which 35 were for work. The question is, for the tax year 23-24, is Joanne UK resident or not? First, let's apply the automatic rules. And this is crucial because in a question that came up in March 2019, the question simply required application of automatic ties, but candidates made the mistake of assuming that the individual had to meet a certain number of ties. Naturally, they got the answer wrong. So whenever you're dealing with a residency question, first make sure that you deal with the automatic tests and only move on to the sufficient ties test if the individual does not meet the automatic resident or automatic non-resident test. So coming back to the question at hand, in the tax year 23-24, Joanne has not been in the UK for more than 183 days. She has a home in Spain as well, and she works there as well. So Joanne is not automatically resident. Then, she was in the UK for more than 16 and 46 days, so these 2 conditions are not met. She was in the UK for 80 days, which is less than 91, but she also worked in UK, so this condition is also out. Joanne is therefore not meeting the criteria of automatic non-residency either. Now let's look at the residency table. She was in the UK for 80 days for the tax year 23-24, and she has been a previous resident. So she needs to fulfill 3 or more ties in order to be treated as resident in the current tax year. She already meets the tie of being in the UK for more than 90 days in the previous 2 tax years. So we now need to identify 2 more ties. She has close family in the UK. She has not done substantive work in the UK, but she does have a house in the UK, even though she did not spend more time in the UK than Spain. Ultimately though, Joanne has met the 3 ties condition and will therefore be treated as UK resident in the tax year 23-24. This is an exam question on residency. Hannah was UK resident in the tax year 21-22. He worked full-time in Egypt throughout the tax year 23-24. What is the maximum number of days which Hannah can spend in the UK and be treated as automatically not resident in the UK for the tax year 23-24? The options are 15, 45, 90 and 182 days. Now this is a tricky question because this approaches the residency rules from a different perspective. To solve this, first let's focus on the requirement. What is the maximum number of days which Hannah can spend in the UK and be treated as automatically not resident in the UK for the tax year 23-24? Because the requirement focuses on non-residency, let's refresh the automatic non-residency criteria. 1. In UK for less than 16 days in a tax year. 2. In UK for less than 46 days in a tax year and non-resident during past 3 tax years. 3. In UK for less than 91 days in a tax year and works full-time overseas. Now let's apply this to the circumstances of Hannah. He could just be in the UK for less than 16 days. This is a viable option, but these are too few days, and the requirement does focus on maximum days. So let's look at the next. We can't choose less than 46 days because Hannah was previously UK resident. The third option, however, could work as Hannah works full-time in Egypt in the current tax year. So he can get away from being treated as a resident as long as he spends less than 91 days in the United Kingdom. So out of the answer options available, option C, which is 90, is the best, as this is the maximum number of days that is less than 91 days and that Hannah can safely spend in the UK without being treated as UK resident.